with pricing and inflation, and that's the biggest concern right now with the economy.
Yeah, inflation numbers came out today and they went down, so it's totally helping us in pricing. And interest rates are going down, which is amazing. We want that to happen to help stimulate the housing market here. Tomorrow is the big meeting with the Federal Reserve on deciding if they're going to increase the federal fund rate by 50 or 75 basis points. It's predicted that it will be 50 basis points.
Yeah, and that
will not make interest rates go up.
Yeah,
it's okay, that's good. Rate.
Yeah, and if anyone's been watching this channel before, we always talk about how the Fed controls the Fed funds rate, which kind of trickles into mortgage rates, kind of doesn't. It just trickles into the banking system. And then, mortgage lenders and investors who buy those notes, they kind of price loans where they see future risk and things like that.
That's right. It doesn't, the last increase affected rates a little bit, but the one before didn't do anything to it, and the one before that lowered interest rates. So it doesn't really affect us a lot, but people always assume by increasing by 50 or 75 basis points, it affects your interest rate, and it doesn't always do that. When we see inflation numbers go down, interest rates go down, and that totally helps us. And they're predicting by the end of next year, interest rates will be in the low fives, which is awesome.
Yeah. Yeah, I really think before COVID, where were rates at? I think they were probably in
high twos.
5.2s.
Yeah, high twos. I would say 2.5, 2.75.
Wait,
which is phenomenal.
Pre-COVID or?
Oh, pre-COVID, I would say high threes.
High threes, fours.
High threes, fours. I think a good stable interest rate is going to be between the fours and the fives. It's not realistic for rates to be in the twos and high twos and low threes. That was just because we were in a world crisis. We were in a pandemic, and now it's an epidemic, and so it's part of the normal now. COVID and stuff like that. Unfortunately, I hate saying that, but kind of like the flu, it's part of the normal.
Yeah.
So because the world didn't know what was going on, the economy took a dump, and that's what helped interest rates go down. But unless something happens like that again, which we hope that won't ever happen, rates won't be that low again.
Yeah, I agree. And like right now, as we've been going through, we talk weekly, even daily sometimes. They've crept up depending on where the fear and uncertainty is in the market, and then they drop when we have good news. They go up when we have bad news. But it's a daily thing, and you and I are working with a few clients, mutual clients right now, and I actually texted one of them just an hour ago saying, "This is when you check in with Kathy every day. You want to lock your rate on the right day."
That's right. Rates are bipolar. They go up and down every single day. I feel like, that's the first thing I do, unfortunately, every morning. I don't check on my kids. I look at the mortgage news and my phone and see what's going on in the market to see if I'm going to have a good day or a bad day. That's just how it is, unfortunately, right now with the volatility in the market. But I feel like going into next year and the end of next year, rates will stabilize and we'll be in the fours and fives and low fives, high fours, around there. And that will be a good stable rate for the economy.
Yeah. So I had a question for you, and a lot of people probably don't understand this, but when you're shopping for a house, and I just mentioned locking your interest rate, can you deep dive into that a little bit more? Like, say someone has an offer out, maybe it's accepted. Like,
there's tons of ways to lock. You can do if you're buying a house and you want to do a future lock, you can. But if rates go down more than 100 basis points, then we have to, as a lender, renegotiate our rate with the investor to lower that rate down. And that happened a couple weeks ago, or last month, I should say, when we lost close to 200 basis points. And rates just took a dump, and which was awesome. I got most of my clients renegotiated down almost 0.375 to 0.5 in rate, which was great for them and their payment. And none of them knew it until we got to closing. So it was a big surprise for them. It was an awesome gift for them too, and they just love that.
Yeah, it's super powerful. Like, knowing when to lock your rate, because typically an escrow period is 30 days long.
Mm-hmm.
So if you get it under contract on, let's say, January 1st and you're going to close January 30th, you
It's a
don't have
30
you don't
lock
have to lock on the 30th,
on day
or
one.
on day one, excuse me. Yeah, you can lock on day 10, day 15. Eventually you need to do it, but
Yes.
depending on where the news cycles are at, if certain positive numbers are going to
That's the importance of listening to the news, and of interest rates. I had a client, I just closed him yesterday, and they're like, well, what do you think? And I go, it's risky to not lock your loan, but there is news coming out that rates might go down. And so I'm telling you that now this is your rate at 6.625. This was 30 days ago. And then she's like, well, what do you think? And I'm like, well, I think we should float. That's what they're telling me to say. That's what we should do. And then we waited up until 2 weeks ago, and I got them down to 6.125, which is huge.
Wow.
Just by listening to the news and communicating with my clients, and just letting them know, like, we should lock in your loan. And then the next day she goes, well, I'm curious, did we do good? And I'm like, yeah, it went up 40 basis points that next day. So I was super thankful that we locked in that day, because I was kind of freaking out the next day. But she was curious. Curiosity kills the cat. She wanted to know if it was any lower,
Yeah.
But they were super stoked with them too. And lots of clients right now, because it's an opportunity right now to get deals on houses. We did a 2-1 buy down. So for the first year, their interest rate was at 4.125, which saved their payment. Their loan amount was $405,000, which saved their payment $497 per month for 12 months. The second year went to 5.125, and it halves that out, and it saved them like $290 a month. But it's so worth it right now, because sellers have to pay for this.
Yeah.
And the sellers paid for that and all their closing costs. So their payment ended up being like $2,200 for the first year, and which was amazing for them. And they were super stoked on that, because it's predicted that rates will go down. And so at that time, when they go down, we will regroup and refinance them. If we don't use that complete buy down, because that buy down on that loan amount is about $9,000 of what the seller is paying, the difference we get a payoff on that, and goes towards your refinance closing costs, which is awesome, so that it doesn't go to waste.
That's cool. So the seller prepays $9,000 about to buy down your rate for 2% the first year, 1% the second year.
Mm-hmm.
And then when rates dip in the future, maybe next fall
year, or the year after, then we refinance them. And if we don't use that difference, it goes towards your refinance, so that money doesn't go to waste, which is awesome.
That is awesome.
And just taking advantage of being able to get sellers to pay for this right now, because last year, no way, Jose. There's no way sellers were pay for anything. You're paying everything 10, 20, 30. I had one at $100,000 over asking price. And so it averages out when you're paying that much over where your payment is.
Yeah, and with some of those transactions that I saw, people were guaranteeing money over appraisal also. So
that's right.
If it didn't appraise, then that buyer had to come up with that difference of, say, $20,000 or $10,000, whatever it was.
Yeah, and so when you average that out now, and you look at the numbers where rates are today and what it was last year, and you're paying that amount over, it almost averages out to what their payment would be today. It's crazy.
Yeah. Yeah, and that's why I advise a lot of people. It's like, don't try and time a market. Buy and sell when you need to, because if you wait until rates are low, you're going to be waiting another year maybe. If you wait until prices are low, who knows when that's going to be. But if you have a good team behind you, where you use some of these strategies, and let's say you buy today, then and you stay in touch with your agent and your lender, they can help navigate the next year. And you can take advantage of future opportunities while also having your house, where you're paying down your own principal, getting your own appreciation.
Yeah, you're building your own equity. There's still so much appreciation right now. It's crazy. And so you're building your own equity. You're not paying someone else's rent, and it's just right now I think it's a better time to buy than last year when the rates were at 3%, 2.875, just because you have opportunities.
Yeah, and guess what? In winter, and especially times like this where there's fear in the market, the people who have their houses listed are motivated. The
They
people
are.
the people shopping for houses, the buyers, are motivated. So they
Mhm.
want to make a deal happen because they're moving out of state. They have a reason to move. Last year, when money was almost free, people were just moving just because money was
That's
so
right.
cheap. They're like, I
Yeah.
might as well upgrade or I might as well move laterally. So they did that, and that's what created all this crazy competition.
Yeah, where there was no houses on the market. Sometimes people were just settling for a house, because they were making so much on their house. So
Yeah.
I feel like winter is the best time to buy as well. No one wants to move in the winter. Lord knows I don't.
Yeah.
But you get sellers are motivated, and the people that are looking right now are motivated too to get a good deal.
Yeah. So along those, I want to mention, every month I usually do a market update where I talk about how many active units are on.
Mm-hmm.
Because last January, the Wasatch Front or the
At
Utah
2,000.
MLS was actually floating around, 1,500, sometimes 1,200. I always look at that number. So right now, as of today, which it's December 13th, available on the Utah MLS is 8,920.
Oh, so it's gone down
It
from.
has gone down. Last month it was about 10,000, and
Yeah.
before that it was 10,084. So it's trickled down, and I think that's partly because there's more transactions happening
Mm-hmm.
because
Because rates have gone down
rates have dipped.
from the
Uh,
sevens to the sixes.
yeah, and then
Mhm.
also there has been some seller fatigue. I've seen that with
Oh,
people.
for sure.
Like
100%.
when last year everyone was saying, "Oh, it's off the market in 3 days," and I'm having to wait 30 or 60. Last month, days on market was 35. That's
35.
median along the Wasatch Front. Now
Mhm.
it's probably closer to 45, I bet.
Yeah.
So sellers get fatigued. They don't like showing their house. It's a lot of work, especially if you have a family or dogs and stuff like that.
Mhm.
So listings as they sit, people take them off. So as a buyer, you can take advantage of that because the seller wants to get it done. And as a
You're
seller,
getting a deal. I had a closing last week with a cute couple. It's their first house, and the house was listed at 460. The appraisal came in at 463, and they got it for 415, and they paid for the entire 2-1 buy down on top of that.
holy
So
cow.
you can get deals out there if days on market is longer. And the
Yeah.
house was empty, and the seller lived in Washington, so she was pretty motivated.
Yeah.
She didn't want to pay that mortgage payment again, but that client got 10% in equity right off the bat, which was amazing. you know
Yeah.
this is why you should buy right now. And then we did the 2-1 buy down, and so their payment difference was like 480 a month. And then and they just moved in this weekend. They've been texting me all excited, and then we're refinancing in a year, a year and a half, which is great.
Yeah. And then they'll get that refund of the 2-1 buy down to help with
Mm-hmm.
those costs. Yeah, it's really cool. Well, nice. So we talked about some of those, days on market, units for sale. We talked a little bit about 2-1 buy downs. I always mention this like to my clients, friends, family who are looking. It's like before start looking at houses online, because that's the sexy fun part of house
Mm-hmm.
buying.
It
I
is.
always I always say talk to a good lender
Mm-hmm.
because that's the uncomfortable part. You gotta give them financials to some
I don't know why
extent.
people are afraid of lenders. Once they talk to me, they're like, well, that was easy.
They don't want to find their tax returns or their W-2s.
Yeah, it could be that. I always tell people, this is the hardest part of the loan, is getting me the documentation.
Yeah,
Your W-2s, your pay stubs, your tax returns, so I can dial in what you qualify for, so I can get your verification of employment, so you can go out looking and stuff. Um, that is the actual hardest part of the loan with me, because I require you to do that upfront. Not all lenders do, but I've learned from the past that you should do this, getting your verifications, because some people say they work 40 hours a week and I get a pay stub that's 35 hours. That lowers the pre-qual amount. So
Yeah.
that's why it's important for me to get those documentations. But I joke around with clients. I love working with clients. My clients are for life. I have tons of repeat business because I've been doing this 1,000 years, you know. And but yeah, I think that is actually the hardest part of any loan is getting the documentation.
Yeah. And when I talk to some clients, they're always like, what's my rate? What can I, what, there, it's always rate first.
Mm-hmm.
And that's because it's in the news all the time. And then it's like, well, that sounds expensive, but most people, you're buying houses based on monthly cash flow, right?
Mm-hmm.
So, so there's
Yeah,
a
your
little bit,
mortgage is the highest payment every month. You need to be comfortable with it for sure.
yeah. And so there's a lot of, there's a lot of variables that go into what that payment is, what you can qualify for, credit
Mm-hmm.
score, the verification you mentioned, how much income you're bringing in. So do you have like there's no clear answer to when someone says, what can I afford? What do you kind of tell people when they ask that? Like if they haven't given you a ton of information.
Um, I say, we go off of gross income. We minus out the debts. So car payments, student loan payments. Student loans cannot be in the CARES Act. They have to be in a payment arrangement. Other mortgages, if they're buying a different house, credit card debt, not debts like your utility bill or your cell phone bill and things like that. And then you minus that out of your gross income, and then you times that by 45% if it's a conventional loan, or 56% if it's an FHA loan. And it all depends on if they have down payment too.
Yeah.
So it's kind of a loaded question, I tell people, but if they want a roundabout estimate, that's what their mortgage payment should be.
So
Set that 45.
45%.
Mm-hmm.
Okay.
Yeah, of gross income, because you live off net income, you
Mm-hmm.
know. And then once you figure that out, what your gross and your after your expenses is, then you'll be like, can I afford that payment? You know. And then I told a client the other day, because they're paying, $1,400 a month in rent. There's not going to be a mortgage for $1,400. And so are you going to be comfortable with $2,500? And yeah, I think so. I want you to put away $1,000 a month in a different account right when you're paying your rent, so you're comfortable with that. So then going into buying a house next month, you're like, I could do it. And you're not just living on mac and cheese, or spaghetti for 1 week in a row, like you can do it if you budget. And I always tell people, go through I do this every year, your credit card statements, your checking account, and see what you're spending on. I realized this year I had 2 gym